Peer-to-peer, P2P. Lending and bank loans are two ways to borrow money, but they work very differently. The right choice depends on factors like approval speed, interest rates, and borrowing flexibility. A bank loan is a traditional loan from a bank or credit union where you borrow money and repay it with interest over time. Banks typically offer lower interest rates because they are well-established institutions with strict lending standards. However, getting approved can be difficult. You'll need a good credit score, proof of income, and possibly collateral. The process is slower, often taking days or weeks for approval. But once approved, you get access to large loan amounts with structured repayment terms. Bank loans are ideal for people with strong credit who need significant funding at stable rates. Peer-to-peer lending, P2P, is a more modern way to borrow money. Instead of borrowing from a bank, you get a loan from individual investors through online platforms. These investors fund your loan, and you repay them with interest. P2P lending has fewer requirements than bank loans, making it easier for people with lower credit scores to get approved. The process is faster, often taking just a few days. However, interest rates can be higher, especially for riskier borrowers. P2P lending is ideal for people who need quick access to money and may not qualify for a traditional bank loan. Now, let's compare them side by side. Approval process. Bank loans have strict requirements and take longer to process, while P2P lending has faster approval with fewer restrictions. If you need quick money, P2P lending wins. Interest rates. Banks usually offer lower interest rates, while P2P loans can have higher rates, especially for borrowers with bad credit. If you want cheaper borrowing costs, bank loans are the better choice. Loan amounts. Banks can lend larger sums, while P2P platforms often have lower limits since they rely on individual investors. If you need a big loan, banks are the way to go. Risk and stability. Banks are regulated and secure, while P2P lending is less stable, as platforms may change policies or shut down. If you prefer a reliable lender, banks are safer. So which one is the better choice? If you have good credit, need a large loan, and want lower interest rates, a bank loan is the best option. But if you need fast approval, flexible requirements, and don't qualify for a bank loan, P2P lending is the smarter choice. The best option depends on your credit score, urgency, and loan amount needs.